Sorry for the delay. Good evening to all of you once again. And those of us in Ghana, happy Independence Day to us, right? We are 67-year old. We are 67-year old. And yeah, so those of you from other parts of the world, you can wish us happy Independence Day, right? So let's do that quickly in our chat box. Um, I'm a proud Ghanaian for that matter, right? Let's wish ourselves quickly happy Independence Day in the chat box. Are we doing that? Awesome. All right. Thank you, Job. So at the end of the day, we are coming to learn how to make money. All right. We are coming to learn how to make money. Some of you are already with us for some time now, and I'm very sure you should be happy for the skill you are learning. Right. Now, before I go deep, so today is it the Pearl Man or the Pearl Woman that is on the Zoom? All right, that just by the way. Now, before we go into the session very well, I would like to tell you something. Oh, okay, both. That's fine. So Pearl Man and Pearl Woman, good evening to you guys. So if I say anything, you will have to respond twice. I will know one is coming from the Pearl Woman and then the other is coming from the Pearl Man. All right, so I want to invite some of you to our premium session. I want to invite some of you into our premium session. It's very important for you to be there because you come to challenge yourself. You are coming to challenge yourself. You are coming to trade with individuals with same mindset. You are coming to automatically be practicing the skill you are learning immediately. How many of you want to be in the premium? The interesting thing is that it's free to be there, right? You just have to follow some basic rules. Basic rule. We have three main brokers we trade with. You choose one is mandatory because we trade synthetic indices. The other two are optional. You choose one of them, and then you deposit a minimum of 50 in the synthetic and a minimum of 100 in the currency. You automatically qualify to be part of us in the premium service, right? And I'm very sure you will get value for making that decision. So, who wants to be in the premium session? Who wants to be in the premium session? And the next thing too is that we are ending this session latest by Monday. We are ending this session latest by Monday so that we can start the next session as right? I will urge you to share the opportunity with at least 2 friends each so they come and get the same value you got, right? Now, I love the fact that the chat is moving, all right? Who can give me the name of the pattern, this particular three candlestick for me? Who can give me the name of that candlestick? The three, the green, the red, the doji red, and then the bearish candle. Who can give me the name of that candlestick about to form? Anybody here? Apart from our Nepa evening star job, you're absolutely correct, right? So this is an evening star forming, and automatically it gives a reversal candlestick on candlestick formation, right? A reversal structure on candlestick formation. But then I confirm it by waiting for another bearish candlestick to form. Why? Because markets can do the same thing like this and just end up being what? A continuation pattern by pulling to the top, right? So sometimes when you find the candlesticks, you need to try and get confirmation to those candlesticks. You need to make sure what is playing out makes a lot of sense. For example, when you look at these three ones here too, they are almost like evening star at the same time. And then you see that the week came longer, and then it ended up going to the top, right? So if you are waiting to sell because you saw this structure forming, automatically the market is currently against you. When we come here, we have an engulfing candlestick pattern over here, right? We have an engulfing candlestick pattern over here. And then you can see that the next candle happened to be an indecision candle, but it's bearish, right? So if you enter a sell here, candlestick wise, you are correct. But then, depending on where you are putting your take profit, will differentiate the decision you are making, right? But here we have Harami. Then the next candlestick did not fully confirm it, but it actually played out. Now, I love these examples because market structure is very important. We treated market structure, the outlook of the market recently. Now, a lot of people make decisions on speculations. Now, let me come to BTC before I start teaching. I was given a buy signal yesterday on BTC USDT on one of my platforms, but I didn't give them. Now, those of you who came to class on when? On Monday, I told you guys that Bitcoin will climb to rates to the 69. Okay. And the point here is it has done that. It has climbed to 69. Right. And those who came to class yesterday, which is my inner circle of people, BTC was somewhere here. And I told them that a lot of people, because at that time yesterday we saw it, it was bearish. It's like the sell pressure was closing below. So it happened to be a bearish. And I told them that this one, that one looking like a bearish, is just coming to take liquidity. But unless the week end, before we know if it is a bearish and if it's going to give us a clear rejection candle to make a decision with, right? And then I'm anticipating definitely that before the buy, we should expect some level of correction before the buy, right? So at that particular time, there was a confirmation of market pulling to the top, right? And then I dropped the signal, but then I deleted it. So it pushed back again. So this week, Bitcoin is buying. And what it also means is that if this candle closed above the zone, clearly, then we could expect it to just come back into this zone, consolidate a little bit. But if this zone holds it, right? This zone holds it, then it means that we are going to expect some level of proper rejection. But mind you, When price moves rapidly for a time, it consolidates, it breathes, it stops before moving again, right? You need to understand this and then think about it always. So if you are jumping into a buy, all those who jump into the buy at the end of the last week candlestick, most of them will be cleared out because the pullback. Now, write it in your notebook. Anytime you want to make a rational decision in the market and the market is moving, you need to take into consideration candlestick averaging. Okay? You need to take into consideration candlestick averaging. Now, the bearish confirmation on this candlestick is active now, right? So evening star formation is activated. So what do? If you're using that candlestick, you enter a sell on the close or the beginning of the new candle, right? Then your stop loss is, so you enter a sell here, your stop loss is a little bit above here. Then probably based on the trend you have, and set your take profit and stop loss. So this could give you 1-to-1 ratio based on this particular setup because tactically price should get to this level. Or if you are expecting it to this level, you can extend it. And then you are getting 2.3 R, 2.3 risk to reward ratio, right? So when you want to be a successful trader, it's not difficult, very simple. You just look at what the market is doing and act towards it. And when you learn the skill and you become familiar with the skill, what happens is that your predictions will be at least 85% accurate. Okay? Your predictions will be 85% accurate because you know the patterns. So you can see the drop is happening. Now, this drop might not continue so much. It might just come back to this level a little. Then probably market will push back into this area again before finally giving us direction, the downside. So this is a basic approach you can use for market. Now, we looked at trading by session and many more, right? And then I'm coming to give you how to identify. Let me look at my, yeah, we are going to look at support and resistance part 2. Then I will touch base on trend reversal identification. If there is time, we'll look at ABC pattern and then how to use Fibonacci retracement. Okay. All right. So basically, you can see market is moving, but as far as floating profits is in concern, unless you close the trade and the profit enters your account, the money is not used. All right. Are we following? Can I start teaching? Can I start teaching? Yes or no? 2 years? Oh, 3 years. Yes. All right. Let me use now. Give me an asset for our case study today. Someone should give us a currency pair in the chat box so that we use for analysis. And all right, so USD Canadian dollar. They are not far from each other. So USD at okay, beautiful movement. So there was a bearish pressure. There was a fundamental data that goes against United States. Let me confirm that quickly. There is Wednesday. So the ISM service PMI data, then factory orders went against United States dollar. The forecast, because I already taught you how to deal with fundamental analysis. The forecast for ISM services PMI is 53.0. Then the data release is 52.6. Okay. Now, it means that the news is bad for USD. So USD have to sell. Now, already, this trend happened to be a downtrend. Market has already been selling. The only problem will create for some people is those who see this area as a support. And then some people who also see this area as their support, right? And then some people who also see this area as their support, they will jump into a buy. The market will give them small profits and push against it. So I always say that if you understand market direction and you forecast market very well, you will definitely be able to identify what market is doing, and then the trend may even favor you, or the fundamental may even favor you at the end of the day. So this market was pushing to the top and then start giving us a sideways movement, like a falling wedge, and then react from the base level of that falling wedge to the downside, right? Now, the problem here, before I go into the analysis, is this. Some people will make a decision over here on this doji candlestick and buy. Then some of them, the reason why a lot of people lose in trading is that some of them will also wait to enter the trade from here. But they believe that this candlestick has gave them a confirmation that the market is coming to buy, right? So they are coming to use that against the market, and then the market will reverse, probably come and hit their stop loss, right? Don't be like those people. Try to understand the outlook of the market, forecast the structure of the market, and be able to project the direction of the market. What do we do? Now, as that news goes against United States dollar, anything that comes first, let's say XXX USD, okay, where USD become the quotation, the quote of the pair, then it means that you see the chart rallying to the top. And then anything that comes USD XXX, then it means that you see the chart dropping like this one. All right. So basically, that's what this actually is talking about. I hope you understand from up to this point. Now, I'm going into the work. Let me share this up. Now, let's take it from here. The first thing I will do is to go to a day time frame. First thing I will do, go to a day time frame. Now, when you go to a day time frame, you'll be able to see the whole nature of the market, right? How the market moved, where it got to, where it is now. Okay, look at those things. Now, when you look into history, what is happening here is similar in many points. Price happened to be here before. Price happened to be here before. Price was here before, and the rest. So if you look at the way this structure goes, you will understand that the market went a steep downtrend, right? Then break and react to a structure at the same time. And this structure is equivalent to this area. And the market pushed the downside. And when it is going back, you now respect this area as a key point as it was going on. Right? The same way, it gave us a trend approach like this. So we can have a channel. So it's moving according to a channel, right? So the channel that is moving in, this is how it's moving in the channel. So basically, if you get to this point, we have a confluence for the sell, but you might not see it clearly on a day time frame. So the day time frame helps you to understand the general overview of the market and what the market is actually doing. Now, you can also forecast the direction of the market on the day time frame as well, especially or based on the type and kind of a trader you are. Okay. So when you look at this market, let's say you are just coming first time looking at the chart, what are you supposed to do, right? Now, I'm not really going deep, giving you the basic information that will actually make a lot of sense. Now over here, market move from here and go to this level. So you can use, most of you are currently using MetaTrader, right? So you can use this line and it cut across, okay? Cut across. As it cut across, you'll be able to understand the language it is speaking. Now, what are the things you should observe immediately? Let me show you. So as I draw the line, you can see here, and also see something here, and also see something here, and you can also see something. I'm adding this one for a bonus because it's going to be your savior at the end of the day. Now, what do I do now? I'm going to pick a line again, and I'll put it here. Okay. So what I'm just trying to do is that I'm considering this area to be what we call a zone. That's what I'm just trying to find out. I'm done with these lines. Don't need them anymore. Okay. I don't really need this at the moment. I'll be using them later. Right now, from here, you can see this area to be a level. But is it an important level? Yes, it's an important level because when price left here, it came to create this high. Okay, price came to create this high. In fact, it created a high as a something like a double top and pushed to the downside. Okay. Then the next high also stayed in the same zone, but price never come back to the previous price anymore. It hangs up. It hangs up here. So you need that area because it will help you make some decisions later. The question now is this. You anticipate price to come back to this zone? That's the question. As a technical analyst, your question is that you expect price to come to this zone probably before going up. When it is going up, what is the target? Is it here? Is it here? Or is it here? Okay. How do I get the arrow pointing to that level? It's because of this area. One, because of this area. Two, because of this area. Three. Why? Those areas are acting as levels for me. My eye spot one level. Let me add it. So from here, I am picking this point again. Okay. Why I picked that point in addition is because of this. Because of this is 1, 2, 3. So if market is doing the same thing here, will it do the same thing in opposite here? Or it will decide to come back to the base point here? Proportional. Now, when it comes back there and wants to push up, how do you go about it? So we are now stepping down towards the next lower time frame and break down this and see what other information can we find from it. Okay, are you following? Let me be getting the feedback space. I don't need this for now. I also don't need this. So now we go to 4H. We are now coming to find direction of the market. I cannot take question now, please. So we are now getting to know the details of how the market behaves at that particular point. Now, price got to this level and then 1, 2, 3, 4 times. We have a zone there. So a reason why, even though the fundamental came in, the reason why the market respected, there was also a rejection power there. Okay. The market was trying to go up, but then finding it difficult to climb that area. Historically, we have some zones here. Just that those zones are higher than this current zone. So now, what next? That's the question you ask yourself. Now you can see that this bearish candlestick pull this way and then reversing. A lot of people ask, should I buy? No, you don't have to buy. This bearish pressure is not done yet. Okay. If this bearish pressure wants to be done, can even pull up as high as this area. Okay. You can pull up high that area and then find its way into the zone. So if you find its way into the zone and you are considering an uptrend, or you want to check if you go into the zone, what a tool can you use? I will use the Fibonacci, connect it from this low up, which means that there's a tendency of market making a reversal here. But remember, if not the fundamental data, probably this market would have break and keep going up. That's one side. The other side is that what if the fundamental data goes in favor of the currency pair? To still be doing the same thing. Now, you need to understand this so that when you go into the market, you should be able to know how to position things and handle stuff. So you get the direction from here. Now, what is the general trend of this market? It's an uptrend. Okay, it's an uptrend. So it's going in a channel, even though it's not a straight channel. The channel is coming closer to each other at the end of the day. But if this market is playing the channel, then the entry price or the current price targeting this zone is actually valid, right? This area is a zone. Hence, when price reacts to it, you actually see it going to the top and find its way towards the zone. Then continue that way till it gets to that stage where it wants to change direction. What is lost so far? Now, after you focus the direction, you come to 1H time frame. Now, new traders, kindly, right? Kindly be on this time frame for a while so that you can understand the concept of the market clearly. Okay. Don't go to 15-minute time frame yet so that you can reduce a lot of mistakes. Now, when you come here, candlestick will communicate with you. Right. So the question is that you see it worthy enough to go in for a buy. And let's go back to the gold and check something. XAU USD. So smaller time frame. See, don't mind me with my lines here. I love lines because that's the only way I communicate with the markets. So I'm not sure of lines. Now, so over here, you can see that the after the evening star formation, you got a very beautiful bright bearish pressure. And candlestick pull up a little bit. Now, it means that one way or the other, United States dollar is gaining strength in the market. But then as it gets in strength, the way each strength will behave to an asset is different. The way the strength to from USD to euro will behave is different from uh, USD to CAD, and it's also different from USD to gold. The one of them may move faster and the other may move slower. Now, when you are targeting the 2141 as a profit target area, it means that you pick few candles to the downside. And then if you are actually expecting price to keep dropping, then maybe you can also control your loss or lock your profits or lock your equity and allow the trade to flow like that. So this is how simple it is to analyze the market. Now, what we are seeing here is on hourly basis. All right. Now, let me just go to 15 something. So the 15 give a lot of reason now. Those who follow me for a while, you always hear me telling you that before you make a decision, once you spot a good zone, make sure price enter the zone before you buy. So one rule I will check for myself if I'm looking for this trade is that price entered the zone and make a decision. Then I can go with the buy as the market pushes the top, right? So that is how you can treat the market always and take charge of it. Now, aside all this, you need to put psychology forward. You need to know what is happening in one country and what is happening in another country. So if you use these elements, you can easily know when the market is going to what? Change direction. Very, very easy, very, very simple. Now, um, now when you get your entry on an hour time frame or the smaller time frames, it gives you an advantage. That advantage is just to give you an entry. For instance, if you're using a 15-minute time frame to do this analysis, or you're taking this from 15-minute time frame, you might end up taking a trade somewhere here. But if you're using a candlestick structure and then you are focusing on only one H time frame, you will actually enter the trade from here. And the question is that when you get the opportunity to enter the trade from here and entering at the current price at this particular price, which of them will you choose? That's also one thing you should put in, right? Then they all go with their risk as well. Now, the next topic is the next point is ABC pattern, right? How it works. So when the market is moving, in most cases, it moves like this. When the market is moving, in most cases, it moves like this. It goes that way in most cases. So over here, what do you need to do? When the market gives you pattern levels on a structure of, I have low here, I create a new high, and then I'm now coming to create a low that is higher than your previous low. Give them maybe some level of direction and change. So what you need to do is that the market starts moving from here and got here. Did not give you this yet. It didn't give you this yet, right? We are coming to use all of them at the end of the day. So when the market moves from here and to this particular area and give you some candlesticks, evidences, maybe a rejection candlestick, or give you an engulfing candlestick pattern and the rest, you need to ask yourself, is the market going to keep buying or it will brief? So if it's going to brief, that's where you now connect your Fibonacci to from where the trend started from to where it ended. Then from where it started from to where it ended, you will now see 0.26, 0.838, 38.2, 0.5, 0.618, and many more. So you'll be expecting a change in direction, or if the market is still an uptrend, you'll be looking at a Fibonacci tool and then be expecting price to what? React a minimum of 50.0 for you. So that's what Fibonacci retracement does. So if um okay, so this is what you do. You take this area here as point A, right? Then the market give you point B. You will use point A and point B to find C. The tool you can use, easiest tool you can use is the Fibonacci level, retracement, sorry, where you put it at 1 and stretch it to 2. When you stretch it to 2, the communication is going to give you, based on how the market is moving, will tell you if the C will be possible. Now, the C becomes A. Find another B to give us another C. Then the C becomes A again, giving us B, and it goes that way. That's how you use Fibonacci. All right. Now let's go into the chart and get some examples for ourselves. Now, Fibonacci work mostly in a trending market. So if you are using Fibonacci already and it's not working for you, ask yourself and check if you actually if you're actually in a trending market. And if you're in a trending market, your A and B will come together to give you a C. And the C is always either 51, 50.0, or 61.8. There is in trading view, you'll see 0.618, 0.50. So when you look into it carefully, a lot of people have problem with be able to know when the market is done selling and when the market is about to do a reversal. Okay. Now when they're about to do reversal, after it gives you the reversal, it will change the mode and it still come back to what? Pattern. Pattern also is talking about the direction the market is, what the market is communicating with you, with the momentum or no momentum from the candlestick and market price, market movement and price. So that's for the Fibonacci. After what else do I mention? I mentioned support and resistance part 2. Now, a lot of people draw beautiful lines, call it support, right? Now, one thing is that when the market is moving up, when the market is moving up and then coming down, that people are asking for reduce the price. People are asking for discount the price. So if you hear about iPhone 16 or iPhone 17 today, and the price is going for let's say $1,000, will you tell the manufacturer, the seller that, oh, I'm going home when it gets to 2,000 for me to come and buy? I'm not sure any of us wants to do that. So because you don't want to do that, You must not repeat that in the trade as well. Now, in trading, there are rules you need to follow. Now, yes, we are expecting levels of resistance and levels of support, but the ideology is that the support going up is that, sorry, the resistance at the top that you are targeting and thinking is a resistance. That same resistance is actually acting another role, or probably maybe the same thing or something similar as well, right? So you need to carefully understand what goes behind the scene, what the market is doing, that there will be a possibility or a reason for price getting rejected at the support area or the resistance area. Now, the support you are going in for, is it a double support like um price got here one, price got here two, price got here three? Are you putting all of them together and waiting for market to make a reaction towards it? That's what you should be understanding as support. Now, you might draw the line expecting the fixed return on it, but it's always not like that because the fact that you just draw the line as resistance, don't expect when price gets there because you draw a resistance, market out to what? Turn against the other people who did not go in line, right? So you need to carefully understand the logical reasoning behind support and resistance, and you can apply it. What I will do for you tonight is after the session, kindly go and try your hands on it. Try to draw a support and wait patiently for price to react towards it and see if you'll be in profit or you'll be in loss. Okay. So, is there any question? You have any question for me? You have any question? Yes, okay, right. And unmute your mic.
Okay, thank you so much for the opportunity. I'm really learning something new each time I join your class.
Thank you.
So with the Fibonacci,
Hmm.
if I place the Fibonacci on my A and pull it to B and the numbers come, at what point do let's say we have 60, we have 50, 61, we have 50 and the likes. At what
Mm-hmm.
point do I finally make a decision that this one is not going to reverse, or this one is reversing, or this one is a trend continuation? Maybe
Okay,
it
thank
reached
you.
60, 61, or it reached 50. Which of them gives me the confirmation that it's reversing or it's a retracing? It's a retracement.
Okay, good question. All right, so the market is moving and then you want to make a decision. You are not sure what to do, right? Now, this is the point. Price move from here to here. Mr. Bright, let your mic be unmuted so that we flow.
Okay.
Now, so did you like logically, as you're observing right now, you see a reason to sell at this particular point right now? Maybe no.
For me, no.
Now, price move from here and is currently here. So we are seeing this area as your A.
Okay.
Before we consider this place as a B, we'll wait for this candlestick to close, the current candlestick. You see, it's battling between being a bearish candlestick or a bullish candlestick, right? So
Yes.
after 8 minutes, we will then see if this candle will be a buy candle or a sell candle, and if it is going to act as a pullback, right? Now, if
Okay.
that is what we are looking at, you can see that even though the market happened to give us some impulsive movement here on two levels, the next candle did not go with an impulsive move. So that should also tell you that market is approaching a level. Yeah, it's not a major level, but it's a level. So over here, up to here, it's a zone. It's a tiny zone. And this zone happen to be on the structure, right? So what is the probability that you are just seeing the chart? So the first thing you can do in a simplified way is that you wait patiently for this candlestick to do whatever it's doing to see if it is going to be a buy candle or a sell candle. Now, if you now know if it is a buy candle or a sell candle, looking at the structure formed, where do you think this market will go? Ideally, it should come to somewhere 2145, but there's a level there, even before selling. So instead of me jumping into a sell here, and the market will now take me to merry-go-round, okay, before
Okay.
now trying to go into my profits, then I would rather wait for price to go back, and then when it give me rejection candle like this, or like this on this area, I will enter a sell. It's better than I sell at this particular price. Now, it all depends on market movement and the market structure and the reaction of price in the market. Okay, they all factor. But ideally, when it is a strong direction, let's say the bearish pressure is very strong and powerful, you can also see market touching 23.6. Now on the Fibonacci, we are seeing it as 0.236. But if you're using MetaTrader, you see it as 23.6, right? So you can even see a retracement on 23.6 and market continues selling. You can see a retracement on 38.2. The market is continuous selling. You can see a retracement on 0.5, which is 50.0, and the market will sell, which is an ideal place to be looking at. But then
Okay.
when price gets to 0.5, please bear in mind that they can touch 61.8 because the institutional traders always or majorly make a move in the 61.8. So if that is the case, then it means that your stop loss shouldn't be between 50.0 and 61.8. It could be a little bit above 0.78.6. Now, when price cross, so if you are watching the market and price cross the 50.0 and you realize that the impulsive nature in the candlestick or the momentum in the market is higher, you allow it to go until it's finished in whatever it's doing before you sell. And when it break it and test it, it means that the market is changing direction, not retracing. Right. So that's just how simple it is. Is that clear?
Yeah, it's clear.
Well
But
explained.
if well explained, my follow-up question is, uh, uh, why am I waiting for this candlestick to finish forming? Is it because of the zone?
No. Let's assume you don't know about zone. Let's say you don't know about zone.
Okay.
Okay.
So why am I waiting for the candlestick to finish forming before I now make
Okay.
that place a B?
Now, the close of the candlestick determines the name of the candlestick. This candlestick is looking green, showing you that the buyers are actually taking control of the market. But then
Okay.
the time remaining for the candlestick to finish is what? 4 minutes.
Okay.
So you cannot make a decision in the middle of the candle. Probably if you are trading on 5 minute time frame, fine. But you are currently observing the market on the 15 minute time frame. And on the 15 minute time frame, realize that there's a price rejection here. Yes, on 1 minute, on 5 minutes, on 1 second, on 3 seconds, on 3 minutes, there is a movement that happened before it is showing like this. So there are some
Okay.
people who are already on 1 minute. They probably entered the buy, especially the scalpers. They probably entered the buy, right? So as they probably entered the buy, and that buy is it a long-term buy or a short-term? Whereas 1 minute time frame. So that's just to give you a heads up quickly, which I don't recommend, just for teaching's sake. Okay. Now, the same movement of price you are seeing on 5 minutes, 15 minutes, the same movement of price you are seeing here, right? So over here, you can see that price actually get to this place and then we have a harami candlestick pattern. The market is moving to the top. Now you can also see that as the market is moving to the top, the length, the strength of the candlestick is not like it is, which means that it could be a retracement candle, right? Now the next thing is that when this price gets to 1 minute time frame on 23.6, will it reverse? Even when it reverse, will it break this low, or will it break this low, or will it break this low? All right. Or is it just coming to this area, 2143, or it's coming to 2144, or it's trying to tag this, right? Now, the same Fibonacci data we are using on the 50-minute time frame is the same Fibonacci data that's reflecting on the 1 minute time frame. You understand? So if you
Yes.
were to be trading on 1 minute time frame and you want to enter a sell and you saw this move happening, will you enter the sell or you want to wait? Right?
You want
So
to
yes, according to 1 minute, this is already giving us the D. So we now wait
okay.
for the 1 minute time frame to complete whatever it wants to complete. If it is 0.8382, that is it confirmation. You wait for price to get a confirmation there before you enter your sell. You go to 5 minute time frame, the concept is the same, right? So on 5 minute time frame, there is already a candlestick giving you a rejection already that the market is pulling back. So if is it true that it's going to continue selling, then we have to be expecting a reaction here. Now, when you come to the 5 minute time frame, you can also see that we have a zone here. Okay, all right, that's just by the way, but you understand. Many of you understand, but there is a zone here, so automatically, price could be trying to respect this zone and keep selling. So that is all the some of the things you need to put in mind when you are dealing with Fibonacci retracement. So, is that clear?
well explained. Thank you so much.
Welcome. Um, any other, please? What's the best time frame for scalping, Edwin? I don't know your knowledge based in trading yet, so I cannot teach you scalping right now. If your knowledge base is already very high, then fine, but it means that you have to learn separately because scalping involves a lot of activities. You have to be swift, you have timing, and all those stuff. So yeah, and I think many people misunderstand scalping. So we do it the wrong way. Once you enter the market, and in 1 hour, in 2 hours, in 3 hours, in 4 hours, market give you a profit you need. You are a scalper. But I won't teach the type of scalping you are talking about. I can only teach it in advance so that your colleagues will not be misled. Thank you, sir. What is the what is the differences between supply and demand, and support and resistance, and resist? Hey, your question. Demand and supply is one set. One is up, one is down. Support and resistance zone is one set. One is up, one is down. Then support and resistance is one set. One is up, one is down. So the one you want to know, I'm going to say it based on my understanding because definition might not help you. So based on how I use it, resistance zones or support zones are areas where price visits more than once. For instance, how will you analyze this whole area? One, two, 3, 4. How will you analyze it? Will you be seeing it as a support or you see it as a resistance? For you to be at the safer side, you have to see it as a resistance. Price get to all these places. So you have to see it as a zone. Sorry. Price has been to all these places. So this is the zone. Now, how price reacts to the zone makes it a demand on the base, makes it a supply. And before the reaction will happen, you will now see an impulsive move that happened for the price, for the market to now validate that the zone is just like multiple places price has touched. And to me, the demand is how price reacts to that zone at the end of the day. Um, yep, is that clear? I'm very sure. Any other question, please? Do you have any other question? Yes, Edwin, you can unmute your mic.
Yeah, good evening, sir.
Yes, evening.
Yeah, please, I would like to know, as a trader, what's the best time that you have to do your analysis before taking a trade in a day? And then at what time frame do you have to use as a best trader to do your analysis, and which one should be the one that you have to take your trades?
All right, the question goes to your purpose of trading. All right. Um, like I said, I don't know if you are just joining, but I've been repeating this. You, especially from Monday, market outlook, market structure. You need to understand the outlook of the market. You need to understand the structure of the market. You need to understand price action in the market. How do you do that? You use the extreme higher time frames to interpret the outlook and the structure. Then you use the medium or the middle time frames to confirm direction. Then you can use the smaller time frames like 1 hour, 30 minutes for entry. But please, for now, most of you are new and you are starting the game. Use the bigger time frames for now. It will let you reduce errors and put it that way. So when you reduce the errors and you are now mastering, you can come to 15 minutes. 15 minutes is a standard time frame everybody uses, right? For instance, this entry, let's check it on 5 minute time frame. Let me show you some. When you look at it on 5 minute time frame, which of the time frame communicate clearly to you? Let's put it in a chat box. Edwin, put it in a chat box, everybody. 15 minutes and 5 minutes. Which of the time frame creates meaning to you more of? Let me spot a zone here. I'll use that zone to explain. Yes, let's get the answer. 15 minutes or 5 minutes. Okay, we have one person. Price is saying 15 minutes. Yes. Oh, Edwin is saying 15 minutes. Philip is saying 15 minutes. Because on the 15 minutes, you probably saw something you know. All right. You saw something you know, evening star. Now, when you come here, yes, there is a doji candlestick here. But don't you also think that this bullish bearish movement can also confuse some people to go into a buy? Maybe they were looking at the candlestick and they were wondering, is this thing going to buy? Is this thing going to buy? And they saw this long candle. Say, it's going to buy. Then they jump into the buy. Then they do up and down with them and drop. But should you be on 15-minute time frame, everything is simple for you. Right? If you are an extreme high risk trader who doesn't care about candlestick, there are a lot of traders who don't care about candlestick. They don't read candlestick. They look at where prices and they analyze it. You can even go in an entry here, or they go in an entry here and catch the whole 30-minute time. Now, this market move 1, 2, 3, 4, 1 hour. So you can also consider this whole move as a scalp. Now, there are points in time where this setup played 1 hour, but there are points in time where this small move can actually take you like months, days, weeks, hours, right? So the setup also determines your entry level. So the time frame is all about what communicates for you, what works for you. I stay with 15-minute time frame, but sometimes I step down to 5-minute time frame to get better entries. When I'm trading synthetic indices, I trade boom and crash more, so I love to play with 1-minute time frame. It communicates a lot of things to me at the same time. Now, Kim Bright, let me ask you openly, did you see um the Fibonacci acting a little bit reasonable here? So it means that if you were to enter the sell, the market is currently not going in your favor. So if you are expecting the market to reverse, which you identify your point B, what you just be looking at for is rejection candles around here. Okay. Which means that you are expecting that um you are expecting that market should not create a high higher than this level, this level. So if it did not create a high higher than them, probably it comes here. You are probably going to be expecting inverse head and shoulder pattern. Okay. So if it also come here and decide to touch base a little bit here, you are still seeing a reversal pattern for inverse head and shoulder pattern formation. Then you now see the price going to the downside. Now, if you have missed the first one and you miss this entry again, what you need to do is to wait for the next pullback. Don't don't just jump into a buy because sometimes the market will be consolidating and so you now expect the market not to give you a new high. Will give you a new high, but it should be lower than the previous. And based on the distance, the average movement will actually tell you what to expect. I think it's comprehensive enough. Is that okay? Are you all answered and you get the explanation clearly? You can unmute your mic if your questions are well answered.
Yes.
All right.
It's well explained, sir.
All right. Thank you.
It's well explained.
Yeah,
Thank you so much.
great. All right. So I'm not going to take any question again. I have a session again. I have to rest a little for that session. So keep your questions asked on the group. How do I mark supply and demand correctly? The truth is that it's not about marking it correctly. It's about seeing them what the market is doing. Okay, because you don't usually mark support supply and demand. You mark zones. The zones produce demand and supply. What elements do you have to measure demand and supply? The reaction is what you need to. So if you want to go deep into all these things, especially you are seeing yourself. Edwin, if it's a simplified question, you can ask, but it's something that will take more than 2 minutes. I'm not going to answer. You can ask and let me see.
Okay, sir. It's about the when you want to create an account on the top FS, the copy
Okay.
trading. So at the point when it's a type of trading, there is a two option. One is no zero commission, and then the other one I've forgotten. I don't that portion. I don't know which one should I should take.
Okay. We have the zero and raw spread.
Yeah, Ross.
Okay. At that point, the broker is asking you what type of service should they provide for you. So we have two ways. The broker uh, is giving you A broker and then B broker at the same time. The broker has that ability. Just like anybody who play lottery here before, if you go to the booth, they can ask you if they want to write on paper for you or you want to play with from the machine. Edwin, is that correct? Have you heard people saying that before?
Yeah.
Okay. So you would say, okay, the reason why you want to, maybe the money you want to um play is big, or you are expecting to win like $1 million. Then you are looking at the person writing the lotto for you and say, can I trust this person? Okay. You say, can I trust this person? Okay, man, sir, you write it from the machine for me. So when you win, you can go and take the money from the bank. So the commission, the one the broker is giving that to choose a commission, you are actually behaving like that person that is playing the lotto to go and take the money from the bank. And then the other one, which is Z0, everything is included in the spread, you are behaving like that person that wants to play the lotto with the kiosk person and believing that when I win, I'll come and take the money from the kiosk person. Now, the mindset for brokers is not the same as the lottery, but I just want you to have that overview, right? Now, what happened here is that one, the broker connects you to the APIs directly to the foreign exchange market where all the big banks are traded. So you enjoy the spread and everything like the big banks. Then you pay them commission for rendering that service for you. Okay. The second one is the broker buys the currency pair and resell. So that one, you'll see that the spread is not the same as the spread you would have paid. So let's say you are buying odd US dollar and the spread in the market is one. Okay. When you're using the commission brokerage, you are also going to get the one as the spread. Then after that, you pay the broker commission. Then the second option is that the broker buys it at one and probably reselling to you at three, but will not charge you commission for that transaction. So that's the difference between the two. So you can go for the any of them that suits your style of trading, but there's no much difference between the two. And then the regulations, the regulatory systems, and then execution mechanisms are also different based on where you are as well. Edwin, I hope you are answered. If your account is Eunice, if your account goes negative, does it mean you blow your account? You didn't just blow the account, you blow our account and you owe the broker. When the account goes negative, you didn't just blow, you blow and then you owe the broker. So when you deposit, the broker will take that negative from you, right? That is why you need to understand your leverage mechanism and also understand your margin so that you don't lose. You just be like somebody who borrowed money to wedding and after divorce, he's still paying the loan. All right? Trade cautiously, please. Trade in a way that you can come back tomorrow and trade. What the premium group, do we have deadline? I need a little bit of time to save up. Well, we don't really have a deadline, but we are looking up to 100 people. Once we have 100 people, we are going to groom them till they understand before we take a new person. Edwin, the interesting thing is that you can use any of them. The broker we recommend for you is already a solid broker, so you are safe. You can use any of them. They won't steal you, all right? I trade with both. You understand? Thank you. All right. It's 8:02 in Accra, 9:02 in Lagos PM, 10:02 in South Africa. Thank you so much for your time. We'll meet again on Friday. Please practice so you don't forget what we are teaching you. Thank you so much. Have a good evening. I wish you the best of the rest of the week ahead. And the month should be fruitful, right? Thank you all. The video will be posted on YouTube. Kindly put some nice comment there, right? To energize us to do more. And then like, share, subscribe, and probably share with other people because I learned it's helping some people in many